The foreign exchange market is another one that a lot of our students have decided to pursue. That is where you're looking at the difference in exchange rates between two different currencies. You kind of mentioned that in the beginning section too. It allows you to invest globally, internationally.
Now, this whole talk about trading and investing, it's new for a lot of people, and there's really a couple different categories. And we kind of hit it earlier about you have the smart money trading for income, but also trading for wealth, and that wealth strategy can potentially be like a passive investing strategy that a lot of people like to use. Now, rather than just trading stocks, which are very expensive right now, how might somebody use the options market to maximize their capital, maybe in an IRA or a 401k, to have more control of their money?
Yeah, well, first of all, passive investing does not mean hands-off investing. It doesn't
Correct.
mean you just put something together and then you put it on cruise control and just let it run. There are things that you can do to manage your investments, which you should do. That's a big part of proper education, is how to manage what you have. And passive investing is more for somebody who doesn't want to be real active, certainly not a day trader, but somebody who wants to put something together that is more, kind of runs a little bit more on its own, but you never let it run on its own totally. You want to make sure you always are protected and that you always look at taking a profit. One of the problems with what most people are put into is that there's really no consideration for the price that you get into something, and there's no consideration for taking a profit or for protecting yourself from a loss. Those are all components. And you mentioned earlier in this last segment, Josh, about buying at wholesale and selling at retail. The only way you can really do that consistently in the market is to have that timing component down, because that's what's going to help you identify where the wholesale prices are, where the retail prices are, and when a price is bound to or has a great opportunity of either changing direction or continuing in a certain direction. That's basically timing the market or timing individual assets. That's what OTA's core strategy does, and that's really the number one thing that you need to understand. No matter what you are trading, what your style is, your time frame, or the asset that you are investing in. We talked about futures in that last segment. The foreign exchange market is another one that a lot of our students have decided to pursue. That is where you're looking at the difference in exchange rates between two different currencies. You kind of mentioned that in the beginning section too. It allows you to invest globally, internationally. That's a market that's a huge market. In fact, it's the biggest market out there. It's bigger than all of the stock markets combined, trading over $5 trillion a day. It is open 24 hours a day, has fantastic leverage. And when we're talking about leverage, it's just basically looking at every dollar that you have and just multiplying its power, maximizing the value of that investment dollar. That's what leverage is. It's very similar to a mortgage. We talk about this a lot, but that's a good analogy. If you want to buy let's just say a $400,000 home, you don't have to put $400,000 in cash down to own that home. You can take out a mortgage, or maybe you have a down payment of $40,000. That $40,000 now controls a $400,000 investment. Well, you can do the same thing with these investments, with the futures market, with the foreign exchange market, with the options market. Those are markets that the institutions are using on a regular basis. They are available to all of us as individual traders, and the education is available to be able to maximize the value of them. But no matter what you're investing in, no matter what you're trading in, the number one thing is risk management. And that is important no matter what you're doing, what your style is. Even if you are doing a long-term, passive investment, always make sure that when the market does decide to go through a correction or a bear market, that it doesn't take you with it. And you can be protected. With options, for example, you can have an insurance policy in your portfolio.
Yeah, that's the great thing about understanding these different assets, and that's why we talk about them every single week. Is they all tie together. It's great to understand what is the U.S. dollar, what is that doing? Because that can potentially impact the price of stocks.
Sure.
And people are invested in stocks or mutual funds in their retirement accounts. So how might that help the average investor? Knowing more, there's correlations, there's inverse correlations. So if one is going up, one could be going down. It could potentially add more odds in your favor.
Exactly.
Al, in these investing classes that you teach, you talk about how to time the market by letting price come to you. But just looking at a price chart right now, this whole month, almost this month, there really hasn't been a lot of upward movement. It's been fairly flat, right? Now, if someone is investing or just that buy and hold strategy, there really isn't a return there. Now, you kind of talked a little bit about options a little bit earlier. Mm-hmm. What are some strategies that the average investor could potentially use with options, even if price stays the same? If price doesn't actually go anywhere, is there option strategies that the smart money is using to get paid to wait?
Absolutely. And one of the reasons they're called options, Josh, is that there are so many options with options.
Was that a pun?
It was a fact, actually.
I like that one.
Yeah. Though. There are option strategies that you can use if the market is going up. There's option strategies you can use if the market's going down.
What does that mean, going down, though?
If the market's going down?
Yeah. So how does that happen? A lot of people don't know that there's a good strategy for down markets.
Yeah. I think they all know what a down market is.
Well, I believe that.
But there are ways of benefiting in a down market. Using options is one way to do that. There is an option strategy that will go up in value as the underlying asset goes down. Options are always traded on something. It could be a stock. It could be the markets in general. It could be a futures or forex contract. But let's just look at a stock. If the stock is going down in value and you own the stock, your portfolio is going down in value because that stock is taking it down with it. Well, there is an option strategy that you don't have to sell the stock. You can hold on to it even though the value of that individual stock is going down. You can have an option position on it that will go up in value and kind of counters that downward move. You can have an options position that basically protects your entire portfolio. Just looking at having an option maybe on an index, on the S&P 500 or the NASDAQ or the Dow.
So are you saying that in retirement accounts with options, you are not at mercy to what the market does?
Correct.
You dictate your strategy, whether you are in a bullish market, which is up, or a bearish market, right?
Yeah, and this is important to remember. In your retirement accounts, you cannot let the market take that money away from you. I mean, you've worked for me 30 or 40 years. You don't want to go into retirement and have a big part of what you have worked so hard for end up in somebody else's account. You want to make sure that stays with you. So having protection is huge. Options can be used to provide protection. Options can also be used to actually boost the returns of a stock portfolio or mimic a stock portfolio that you don't even have. And again, there's a number of different options there. Options can be used to just generate or become a source of income on a regular basis.
The smart money is doing that, correct?
The smart money is doing it. And again, it's an asset or a strategy that we all can use. A lot of people that go into options, that may be the first strategy that they learn to use. Mm-hmm. But there are ways of, again, participating in all the different market directions. There are ways of having an option position where it doesn't make any difference if the underlying goes up, down, or sideways. You still have the opportunity to benefit from that.
It's almost like an insurance company, right? Well, insurance companies collect premium all the time.
Exactly.
There's premium that investors can potentially collect with the right strategy through options.
Right.
So that way, I mean, think about it this way. If someone has insurance on a car and you do not get in an accident, which is great, we don't want you to get in accidents, the insurance company doesn't give your premium back. They keep it.
Of course.
There's strategies that average investors can use options for to collect premiums.
Yep.
And if price does nothing, you keep that premium. And then I'll already let the cat out of the bag. We're going to talk about the self-directing. I almost forgot about that.
Yeah.
Self-directing retirement accounts, whether it's a 401k, IRA, there's opportunities that people can potentially take control of their capital. So we're going to get into that, some different ways that you can do that, but also some more techniques and strategies within them that the smart money is using that is also available to the public. This is Josh and Al, Investing with Confidence. We will be right back.